I'm going to be talking to Adam Scott, who's with Shift Action for Pension Wealth and Planet Health, about a study that came out from a German nonprofit organization a few days ago. And it shows that Canadian financial institutions are still big underwriters of the coal industry, which everybody assumes that the coal industry is on the decline, but Canadian money continues to prop it up. So we're going to talk to Adam Scott, and welcome to the interview, Adam.
Yeah, great to be here. Thanks for having me.
Why don't we start with an overview of some of the results from the study, please?
Yeah, so this organization, Urgewald, in Germany, has created and maintained a database for some years now called the Coal Exit List. And essentially, it's a database of all of the major coal projects, so thermal coal extraction and production, power plants, and related infrastructure. So it's actually a very concrete list of all of the global investments that are available on the market. And this year, for the very first time ever, they've done a comprehensive analysis of where all of the most recent finance has flowed to those companies and projects. So this is sort of a brand new, very interesting analysis that looks at where the sources of coal finance are really coming from. And across the globe, the sort of overall data shows there's 4,488 institutional investors hold over $1 trillion in coal investments globally, but a substantial amount of the finance that has been provided for the coal industry globally in recent years has come from Canadian finance institutions. So we rank quite high on the list. And in particular, a number of our large banks have been heavily involved in loans.
Right. The organization has released the Dirty 30 financiers of global coal industry. So Canada ranks fourth as the largest lender and seventh as the largest underwriter. And the banks we're talking about are the Royal Bank of Canada, TD, Scotiabank, and BMO. And I'm sad to say that one of my banks is in that list. Mm-hmm. And Sun Life Financial is 14th on the list of coal investors with over $10 billion of investment. So is there a trend here? Like, are these financial institutions gradually getting out of coal, or are they talking out of both sides of their mouth and still investing heavily in coal?
I think to say there's still many of them are still heavily investing in coal today. I think what's particularly notable, this data is sort of from the period of 2018 to 2020 in particular. So that shows quite recently, we've still seen this upward trend in large amounts of finance flowing into the sector. But we've had since 2015, when the Paris Agreement was signed, all of these major finance institutions have known full well what's required of them. They know that Canada has been part of the Paris Agreement pledge, and they know what sort of trend in world we're heading towards. And yet we've seen an increase in fossil fuel finance of all types from Canadian financial institutions, in particular, the banks in this case. So what we really, I think, can take away from that is there's a lack of literacy or understanding, if we're being charitable, amongst those institutions as to what the climate crisis requires of these institutions. Looking towards today, I think we're finally just starting to see some recognition of what those challenges are from finance institutions. So, I think not coincidentally or coincidentally timed, RBC today released a new net zero plan, which we can talk about.
Okay, so we've got some of the banks that are coming out with net zero plans, and we've seen RBC be one of them that enters into contracts to buy renewable energy, for instance. So it beggars belief that the folks that are looking after the bank's climate risk management strategies aren't aware of these kinds of numbers.
Yeah, exactly. I think they must be aware of them, and they've made a conscious choice to continue flowing finance into those sectors. So the new net zero strategies that we're starting to see all the banks announcing, I think we've had, today was our third of the big five banks have now announced net zero targets. None of them have really contained any credible pathway for them to achieve that. Or for them to dramatically reduce their emissions. They've included bits and pieces. So, commitments to increase the amount of finance for solutions. That's, great. Minor targets around intensity and that sort of thing, but not hard and fast rules prohibiting certain kinds of finance, which would contribute to the crisis. And we have seen commitments to get out of coal finance from RBC, but we just haven't seen it show up in the data yet. And we have good reason to be skeptical that they may still continue to flow finance into not just coal, but also oil and gas that will lock us into rising emissions.
And yet at the same time, we see the global financial community, start beginning to take action. I mean, on Wall Street, Larry Fink, the CEO of BlackRock Inc., the world's largest asset manager, has been warning for the last couple of years about the importance of managing climate risk and allocating capital on that basis. And so it seems like, yet again, the Canadian banks are lagging behind global trends.
Yeah, they're very much behind global trends, and I think that they see that they can still be making money in the short term, and they haven't wanted to put their profit making aside when it comes to doing the right thing by the climate, and that's really problematic. The expectations of institutions have changed very quickly, and that's why we're highlighting coal in particular. Coal is the least you can possibly do. It is the bare minimum, the most obvious area where it's completely unacceptable to be involved in this industry anymore. There are much better, cleaner, cheaper alternatives to coal. There's no reason for it to continue to exist. The demand market for coal is collapsing globally, and this is just there's no excuse for them to participate in it. We need to see them start there. That is the starting point for a credible climate plan.
Final question, Adam. Does it look like the federal government, in its actions since mid-December, when it released its updated climate plan, and now yesterday, on the 23rd, we saw the President Biden and Prime Minister Trudeau announce, a bilateral agreement on heightening climate ambitions, I believe it was called. Does that give you any hope that the banks are finally going to be reined in?
No, not yet. I don't see any evidence yet that there's going to be any meaningful regulation. In one particular area, there might be a little ray of hope, which is that we absolutely require mandatory climate risk disclosure across the financial sector, for the finance sector as well as for companies, to be open and honest about what kind of financial risks they're exposed to here. And that's not the case. So hopefully that harmonization with the United States could come with strengthened rules there. But beyond that, we haven't seen a lot of effort from the political side to sort of rein in what's going on. We've seen much stronger action on the financial sector in Europe around clearly defining rules and starting to talk about phasing out finance for fossil fuels of all types.
Thank you, Adam. I really appreciate this.
Great to talk to you. Thanks.